as we're on the Russell, it's been underperforming. It's a good transition into our sector conversation here today. We'll talk China a little bit right after that, and then we'll get into some commodity stuff just right after that. But Matt, we always do look at the sectors each and every week on Monday in preparation for the week with hashtag Team Tackle out there. The cyclical nature of the Russell, the smaller companies, the energy components, the financial components, those sectors have been downgraded recently at Tackle Trading. About 3 months ago, they were up near 10, 15, 20 yard markers. Now financials, industrials, materials, and energy, there's some relative opportunity in there, but we've moved them more towards neutrality. Let's start with cyclical if we can here, Matt, and give me a read on what you're seeing in the sectors right there.
Well, let's take a quick peek at the cyclical areas of the market. And like you indicated, you got the industrial sector, you have the basic materials sector, the financial sector, and then you have the energy sector. So let's take a quick peek at them technically here. Industrial sector, we have a ranking right there at about 35. A couple things we do like at Tackle Trading about this sector, and you are seeing a little bit of the Dow doing the same thing. Obviously, the Dow is a little bit more of a broader collection of stocks, but when you're looking at the industrials, you're fighting up against a right shoulder breakout right there at the 104 level. Very easy trigger to look at. What you like about it is, after this drop last Monday, good recover, got back above all the moving averages, and then towards the second half of the week, played a lot of defense right there on those moving averages as you threatened that breakout. Never really got choppy above the breakout channel. Stayed right underneath that 104 breakout channel. Very clean above 104, and 104 should see price appreciation back up into the highs here at about 106. A breakout in industrials does not change the intermediate trend, given the fact that you do have a double top, double bottom scenario at 106 by 100. But what it does do is it changes the dynamic of the short-term trend with that breakout. That's why you put that price appreciation into the 106 and not above 106. But that does look like it could happen here, and so definitely keep an eye on the industrial sector. But maintain that 35 ranking there. Looking at the financial sector, maintain that ranking right there at 40 over the week. Pivot confirmation is really kind of consistent here at 35, right underneath the 50-day moving average, right there at about 37 as well. Short-term consolidation, unlike the industrial sector, which got back up into resistance, this kind of stabilized in the middle of the range here in the financial sector. Is going to have a little bit of a chance this week with Visa, MasterCard, and PayPal all reporting earnings, which could see some price appreciation. But once again, got to see it first. When you're in this neutrality here, a lot of times you got mixed data that's causing the neutrality. So we definitely need to see some type of breakout before you get some directional exposure there. Moving on into the last two areas of the cyclical areas of the market, basic materials as well as energy. Basic materials quietly having a very decent earnings report season so far.
It really has, hasn't it? It really has.
Now they still got quite a bit to come, but they've had a fairly decent start. Going to see if they can continue that decent start to earnings with Lynn, Sherwin-Williams, Ecolab reporting earnings this week. Technically here, you did break up above those moving averages. That would be a bear stop out type pattern as you fight back up into these resistance channels. But outside of that, I really don't have anything to really kind of read here technically until we start to see some degree of consistency in patterns and trend analysis, which we are just not yet there with the basic material space. And that's reflective in our ranking at Tackle Trading in the materials right there at that 50 handle. Real mixed data, earnings coming out of the chemical space, maybe a little bit of clarity coming out of gold this week as it continues to fight let's go to gold real quick, fight that 1800 support level a little bit. Maybe that helps, maybe it doesn't. stick with us throughout the week to solidify that, but that's what you get when you get a 50 ranking out of the material space. It's a little bit of a battle and a little bit of a wait and see from us. And then finally, looking at the energy space, energy's got some big names reporting here this week as well. And what I like about the energy space here technically is you see this support level. It is subtle, but it is important to me. And maybe I'm overreacting to this a little bit, but I see that little hesitation here as a failure to confirm down. You see the bear stop out here today, fighting up against that 50 technical resistance level. I'm starting to like energy a little bit more. Maybe another week, maybe see some stabilization coming out of the leadership in the energy space, with ExxonMobil here reporting earnings this week as well. ExxonMobil, look at that 55 handle, fighting over that 55 handle. Intermediate neutral trend, short-term downtrend. Let's see if we can stabilize there around that 55 handle. Same thing when you're looking at some of the other big leaders in the space. Chevron hitting that 200-day moving average, fighting up against that 90 MA, breaking back above the 100 handle, which was an old resistance pivot. And so the energy space, although has fallen out of favor quite a bit, both from a price action perspective, but guys, that's all a lot of us were talking about in this run up here. Sure. It's fallen out of favor here. I think it comes back a little bit as these energy, obviously got to wait for Exxon and Chevron here, but you're seeing a little stabilization towards the lows. I do think that's something to keep an eye on this week.
Appreciate you running through some of those sectors. Obviously, with the cyclical nature of them, they were the ones that we had brought down more towards neutrality. Industrial is the most healthy for a potential breakout, which is why I got the highest rating. We're going to get a lot of data and information through the growth areas of the market this week as well. And obviously, that's where a lot of the leadership is. We do have leadership in healthcare as well, which is having a little bit of a down day on a Monday, but a really great week last week. What about tech, communications, discretionary, some of the growth components here, Matt?
And that's, outside of healthcare and maybe real estate, the sectors that have been the best performing sectors for the quarter and over the course of the last couple months, as you've seen, money flow out of the cyclical areas, as the cyclical areas stopped really driving together based on the economy reopening up theme and so on and so forth. Don't have to finish that statement. I said it so much for like 8 consecutive months. But ever since that point, you've really seen leadership out of the growth areas of the market. And I remember a couple months ago, Mark, I can't remember what day it was, but I do remember there was a moment a couple months ago when cyclicals were losing that shine, and it was losing a unified theme. And we were having a discussion. I said, well, guys, whenever the market gets confused, it bets on growth. And ever since that point, the growth areas of the market have been the most consistent trends, consistent patterns, the areas of the market that you trusted the most from a technical consistency perspective. And so comms, let's not start with comms. Let's start with the leadership in this space, and that is the tech space. The box I drew was the box I was showing you, the visual identification.
That's a big box.
It's a big... Change the scale and it looks a little different, but it is a big box. But that has been the leadership of the marketplace. And so when you're looking at tech's got a big week in front of it with Apple, Microsoft, Shopify, AMD, specifically the names that are going to be driving tech here. Broke out after a support bounce last week. Can it continue this? That's the open question that we have this week in technology. It is ranked right there at 15, 5-point upgrade last week. Love the fact that it held support on the 20-day moving average, continued, broke up above every intraday high. And once again, you're finding a doji following a breakout on Friday. So there's nothing really too concerning to be looking at in tech. The storyline obviously is going to be earnings driven this week. So stay with us as we break down Apple, Microsoft, Shopify, and AMD later this week. Moving on to discretionary. Discretionary, very similar to the tech space. Saw the continuation last week after the failed breakdown on Monday. Every single day, just higher highs, higher lows from an intraday perspective. You can see that fairly clearly on the 30-minute chart. every single day, higher highs, higher lows. Today is no different from what we saw last week. That is continuing here today, and that is on a day where you are breaking out officially in the discretionary space. You don't need me to say this is an overextended breakout. You can see that from the technical response here. But one key metric that I do like to look at from a breakout perspective, and I am seeing a little divergence here, is the RSI. RSI is still at 57, shows a lot of room to grow back up. I got this overextended technically coming into the breakout. You're up 5 days in a row. That's big price movement coming into a breakout, but there is some divergence on your indicators. RSI says we still got room to run here, and who am I to disagree? If Amazon, if Starbucks, and quite frankly, Tesla today, if they have good earnings reports, you could see some movement here in the discretionary space. So once again, you're gonna see that from me a little bit here today on a week that has as much news as this week does. But again, stay with us all week as we break down the hot and heavy action in the discretionary space. You gotta like this intraday data coming into the breakout, though. Very consistent, higher highs, higher lows. Once again, breakout channel at 184, broke up above, and you're at a no sell day. Whereas a lot of the market showing a little bit of a doji, strength in discretionary a little bit coming into early Monday price action on a hot and heavy week, Tim.
Mm-hmm. So our growth areas, obviously, they have a lot of the strongest rankings, and you're seeing that in the charts as you're breaking that down. Appreciate that, by the way.
Well,
cyclical areas
it's not
time.
Yeah, they definitely have the strongest rankings, but consistency, volatility. Our rankings is not an exact science. There is some subjective nature to how we read technical analysis. But I can tell you personally that the consistency in analysis does play a role in it. And so, yeah, I do think that because of the consistency in trends and patterns and so on and so forth from a technical perspective, simply put, the growth areas are the most consistent areas right now.
Yeah, they've been the most consistent. Anything on the defensive side you want to highlight before we wrap up our sectors?
Very quickly, the defensive side of the equation saw a couple upgrades. First and foremost, the leadership in the defensive space is healthcare. Healthcare broke out of the 129.50 level last week, got a little bit of a higher high, higher low scenario. Is this the higher high? Looks like we're going to do a little bit of a Cody special snapback, come back up into that 130 handle. That's the only thing I'm keeping an eye on. But healthcare overall has been fairly healthy very recently. And then the utility space, we discussed this a little bit last week as well. The utility space has a lot of mixed analysis here. Intermediate, from an intermediate trend, it's very mixed. But when you kind of highlight the short-term analysis, from the point, Greg was on the halftime report a few weeks ago, and he was in his segment on Thursdays. He brought in 3 utility picks, and what he was looking at was this rounding double bottom here on the 200-day moving average. It's choppy, but ever since then, you've had a double bottom, double top, breakout, higher high, and now just recently, again, volatile, unlike we're seeing in some of the other sectors. But from a technical perspective, what you did see last week is a bullish retracement that came into a known support and resistance level right around that 64.5 to 64.75 level, held in that support channel, increasing its volatility to the top side. I think that justifies an upgrade there. And so we did upgrade the utility space. Utilities, the only thing you really got to worry about this week from an earnings perspective is Southern Utilities. Consumer staples fighting up against a breakout could occur this week. And if it does, there is safety in staples. And then the last one is real estate. And quietly, real estate has had one of the better earnings seasons so far to date. American Tower, Equifax, and DLR is going to add to that storyline this week.